All right, good afternoon, folks. So I had some questions about the 3S code and how it worked on an intraday chart in the wake of volatility. So as you know, we had some decent volatility kick in yesterday around lunchtime with a move down to about 31.15 to roughly 30.90 in about 10 or 15 minutes. I'm going to show you how we use the 3S code in these types of situations, and it really is no different. It's all price action based strategy, but we just use the 3S code indicator as more of a visual tool to help aid us fine-tune the entry and exit parameters. So we had, going into the day, this is yesterday the 20th, we had a long setup right around here in the 31.11, 31.12 area with targets up here to the 31.17, 30.18 area. You can see that we hit that almost to the tick and rejected it briefly, sold back down, and then came back up, tested it again, which gave us a new high of the session, which also started a new 1, 2, 3 top count. So notice here we're making new session highs, but we have divergence highs down here on the RSI. So we're making lower highs on the RSI, higher highs on the S&P, and that's exactly what we want to see in these types of setups. So we do have the 1, 2, 3 top, the shorter term moving averages crossing down into the longer term, and it's also occurring right at the 200-day moving average. So this is a good combination here with this going on at the number 2 breakout level with the divergence for a potential trade to get short. So what we did here is we took a short here at this around 31.14. Initial targets were at 10, so that was a 4-point winner, $200 a contract. Now the question is, well, how do you catch some of these longer term moves? Well, there's a lot of different trailing stop methods, and we talk about that with the 3S package, but one is just simply follow a moving average. One thing that you could do, that you could consider, is maybe adding another moving average here. You could also add something like par SAR. I like to add another EMA, shorter or longer, but to make it stand out, we'll just leave it at 9, and we'll make this, instead of a line, we'll make it that little square dots here. We'll hit apply, and then we hit OK, and you can see this provides us a potential trailing stop mechanism. So if you're taking first targets at TP1 at 31.10, and then perhaps TP2 at 31.05 or 06, you can continue to trail that down, and you caught a really nice runner before we flipped around to the long side. Now, this is a trade I did not take. Why? We have new lows here on the RSI. We have new lows on the S&P, lower lows on the RSI, so we didn't get that extra divergence confirmation. Secondly, look how far, or look how wide the moving averages are. We want to see those a little bit tighter. Also crossing, they don't cross until they hit TP1, so that is a trade that I avoided. Let me remove this here, and we'll take a look at what happened today. Another trade setup. There's a few setups, and I'm going to show you which ones I took and why. I actually only took one. So here we had a setup around 6 a.m. It's about when I start my trading day. But what happened? We didn't get the cross right here. Once we got the cross, it was right into the 200-day moving average. So did not like that trade. Wanted to see more confirmation with closes down below the 200. Potential retest, did not get that. Here's a trade setup that did break down, but the moving averages were too far apart heading into the cash open, so that's another one I stayed away from, but would have been profitable if you took it on the initial breakout. And then third setup of the day is this one here, and it is one that I took. So you can see that we broke out right here around the 3100 level, and then you immediately took about 3 points of heat. But notice that the averages have not crossed, but then we kind of bang around here at this indecisive 31 even mark, and then we finally get a cross back up here, so we get the hook back through. Moving averages crossing up. That's a validated trade from 3100. Have to be careful of potential resistance here at 0405, and then ultimately reaches the first profit objective at 06 half. So that's a good 6.5 point winner there. And then another market I like to follow is crude oil. So you can see what we had on crude oil. Coming in today, there's a potential trade. And I look at 6 a.m. because that's when I start looking at the markets. You can go back either earlier or later. So I'm looking at 6 o'clock here, sitting in front of my desk, We are forming multiple bottoms. We're getting higher lows on the RSI. We get a moving average cross up and through here at 5,700, and we come up and tag our first profit objective, which is a key price level at 57.30. So it's a 30-cent winner, or $300 per contract. And then we've been in a pretty strong uptrend the rest of the day. No trade here as we don't have a cross, and we'll probably call it a day in both markets. So that's how we trade extended moves. Don't see these too often. You see a lot of range bound action, but these are a couple of examples with the sell-off yesterday in S&P, extended move up here in crude oil today. So hopefully that answers some of your questions. If you have any more, feel free to email me at support@seasonalswingtrader.com, and we'll see you on the next update.